HDFC, that's going to be one group which is going to be in focus. One of the largest bond issuances that we've ever seen, 25,000 crore rupees. Of course, it's a tenure of about almost 10 years, and the coupon rate is at 7.97%. The major investors, LIC, EPFO, and some of the large private banks as well. And it seems that it's an oversubscribed issue with 92 bids received already. So this is going to be an interesting development, although it's, of course, a large tenure bond or long tenure bond.
So Aisha, I think my understanding is that you could understand is that you're raising capital just ahead of the merger, and that's 25,000 crore. And you're raising it about 8%, which means HDFC, if you're committing to a long tenure of 8%, and we're talking a long tenure, that means
your view on rates.
That means your view on rates is slightly different. That's one part. Second, this also means that before the merger, when the balance sheet of HDFC and HDFC Bank would be merged, there is enough and more liquidity in the balance sheet of HDFC Limited and HDFC, and so that it does not really create any kind of a crunch for HDFC Bank merger to go through. However, what this will do, which is what markets thought, that because HDFC Limited is borrowing at such a high rate, the total blended rate, return on asset and return on equity for the merged entity in the near term will remain under pressure. But at 8%, if HDFC, which is like the bluest of the blue chip paper, is raising a long term tenure, that just tells you that in the bond market right now, I think it's a good time to really lock your capital. And this is just a personal finance advice for all our viewers here. It's a good time to perhaps lock long term capital in the bonds. You won't get 8%, 9%, 9.5%, that kind of a rate for a long time.
Yeah, and this is a move that's preceding what we saw in the month of November as well by HDFC, close to 2,000 crore rupees via a bond issue. Let's in fact listen in to K.K. Mistry, the VC and CEO at HDFC, on this bond issue and the demand trends for their bonds.
Well, the demand for good quality paper is always very strong. People are always looking for opportunities to deploy money in safe instruments. We launched the issue with initial expectation of a minimum of 5,000 crores, but we kept a green shoe option where we could go up to 25,000 crores. The actual demand we had was more than the 25,000 crores that we had originally thought would be the maximum we would get. We had demand from close to 93 or 94 odd investors, and we finally could do the allocation only to about 53, 54 people. And some of the larger funds who had sought, for whom there was a demand, we could not satisfy the entire demand. See, there is sufficient liquidity in the market for good quality companies to raise money. For us as a housing finance company, money is raw material. We have a very large disbursement requirement every month, month after month, and we have to raise money through various sources. We raise money through deposits, through term loans, through bond issues, through overseas funding, and we try to raise money from that source which gives us access to the cheapest form of funding at a point of time. So this time we saw that the demand for bonds was strong. People were looking at safe investments or safe avenues where they could deploy the money, and therefore we went in for this fairly large issue.